you can definitely invest in Nifty Auto. Just give you a glance of it. See, Nifty Auto consists of almost 25 stocks in it. That is, it includes four-wheeler stocks, it includes two-wheeler stocks, it includes three-wheeler stocks, and it also includes auto ancillary stocks like tire stocks, machinery stocks, and also other many auto ancillary stocks. All these stocks comes together. There are 25 stocks which are there in Nifty Auto, and they form a call index called Nifty Auto. Now, just to give you a glance from 2008 to 2022, I have been tracking the markets from 2008 since my graduation from 2008, and currently it is 2022. So almost it is 14 years I have been tracking the market, the equity market, the Indian market. See, whenever there is a turn in the market, it can be on the buying side or it can be on the selling side. The first indication of the turning of the market is given by auto stocks. You can go and check. You can go and check in the history. You can go and check after this webinar. Whenever there is a rise in auto stocks, there is a rise in market. There is a trend change in the market. The trend will change to bullish, and whenever there is a fall in the auto stocks, then the trend change to bearish market. You can go and check in 2008 when the first recession came, the big recession of Lehman Brothers. The first fall in the market was led by auto stocks. You can go and check the second fall of market of 2012. The first fall was led by auto stocks. And when market started going up in 2014, when the new Modi government came, the first index which has reclaimed the all-time highs is the auto stocks. Again, in 2019, also in the Corona times, or 2020 in the Corona times, you can see the first slide was done by Nifty Auto Stocks, that is the auto sector, and the other sectors followed. In 2022 and 2021 as well, when now the market has started again going up, the first sector which has reclaimed the all-time highs is Nifty Auto. You can check the value. Currently, it is somewhere around 12,500, which is the all-time high. The Nifty Auto is trading at an all-time high. But still, Nifty and Bank Nifty is yet to make the all-time highs. That means, if you want to judge the mood of the market, if you want to judge the way of the market or the trend of the market, the first index which you have to see is Nifty Auto, and the next other sectors they follow Nifty Auto in the coming times. So let's see how Nifty Auto is outperforming the markets and why auto stocks are in limelight. I'll go to the next slide. See, before going to the statistics of Nifty Auto and how you should invest and what are the ways you should look into the auto stocks, let's go to some facts about the auto sector. The Indian automobile market is one of the largest in the world, both in terms of sales and productions. I don't know how many of you know, but Indian markets is one of the biggest, or not talking about biggest, in the top 2 or top 3 in terms of production, in terms of sales, and in terms of exports as well. Currently in India, there are various companies which has come and set up their own plants. That is, from the companies came from Japan, the company came from Korea. There are various companies which has came from Europe as well, which has came into India, tied up with many Indian companies. They have set up their own plants. So India is one of the leading industry in terms of auto, in terms of sales, in terms of production, and also in terms of exports. That means India is right now producing their own vehicles, selling their own vehicles in India, and also exporting their vehicles. So India is one of the biggest market for automobiles. Second, until 1930, India did not have any manufacturing facility, and cars were imported directly from other countries. See, after 1991, I don't know how many of you know, after 1991, when the Indian markets was opened for the world, that is the liberalization, globalization was done by the Manmohan Singh government. Many global companies have come into India and they have started investing into the Indian markets. They have set up their own plant. They have tied with the Indian companies. They have started production of various 2-wheelers, 4-wheelers, and 3-wheelers. So from 1930, the revolution started, and from post 1990, the biggest revolution of the automobile sector started in India. From 1960 to 1980s, the Indian markets were dominated by Hindustan Motors. I don't know how many of you know, but the first company of Indian auto sector is Hindustan Motors. I know many of you heard about Ambassador car. That Ambassador car was one of the flagship product of Hindustan Motors, and most of the politicians, most of the big celebrities and all, they used to use Ambassador cars in India. Thus, that Ambassador car was first produced by Hindustan Motors. That was the first automobile company of India. Later, after 1990s, 1991, many other foreign participants came into the India. Let's see how it pans out. It was in 1980s that two firms, Hindustan Motors and Premier, were challenged by new entrant. From 1980s, the new entrant Maruti entered into the market. I know everybody know about Maruti. It is one of the biggest automobile company in India, which holds more than 45 to 50% of market share. Still into four-wheelers, Maruti is the biggest market shareholder in India. From 2000 to 2010, almost every major car company expanded its presence. Post 2000, many foreign companies came into India. They have started their own plants. I am talking about Hyundai. I am talking about Mahindra and Mahindra. They also started producing their own cars. After Hyundai, Mahindra and Mahindra, many other companies like Volkswagen and even Skoda, these kind of companies came into India and started manufacturing their own cars. Now, let's see how resolution has started. See, this is the chart of Nifty Auto versus Nifty in the current year. In 2022, if you see Nifty has given a negative return of minus 2.4%. That is in 2022. If we talk about Nifty, the index, the top 50 stocks, they have given a negative return of minus 2.4%. But Nifty Auto Index, that means the 25 companies which are there in Nifty Auto, averagely they are given a return of 13%. So this is the first indicator that the market has bottomed out. The Nifty Auto is outperforming and it has claimed the all-time highs. So you can go and check after this webinar. Nifty Auto has given a return of 13% in current calendar year. In 2022, it has given 13% plus returns, but Nifty has given a negative return of 2.4%. Now, what has triggered this outperformance? Let's see that is the main motto of this session. Why Nifty Auto stocks or Nifty the automobile stocks are doing good in these volatile times, and why Nifty is underperforming the Nifty Auto sector. Let's see why it is underperforming the Nifty Autos. See stock specific performance. These are the stocks. If you see TVS Motor, it has gained more than 39% since January 2022. M&M, it has gained more than 39% again. Bajaj Auto 24%, Ashok Leyland 20%, Eicher Motors 18%, Maruti 17%. Almost most of the two-wheeler companies and four-wheeler automobile companies have given double-digit returns in 2022. But if you talk about Nifty Auto or the markets, still they have given a negative return. That is why if you want to invest in these kind of markets, if you want to judge the market volatility, first index which you have to see is the Nifty Auto Index and how Nifty Auto Index is going on. If Nifty Auto Index have started outperforming the market, that means the Nifty has formed this bottom and markets are ready to go up. If you see the last 7 sessions, Nifty Index have gained almost more than 8%. More than 8% from lows, means from 15,200 or 15,400. Right now, Nifty is somewhere around 17,000 levels. But before Nifty gaining into the market, Nifty Auto has already gained more than 12% from this calendar year. That means more than 13% Nifty Auto has already given the returns, but still Nifty is into the negative rate. That is why we have judged this market. We have collected the data and you can see clearly TVS Motor, it is 39%. M&M 39%, Bajaj Auto 24%, Ashok Leyland 20%. Major of the auto stocks have gained the momentum. That means the bottom of the market is placed, and from here on, the market are expected to do good, and markets are expected to trade in bullish territory. So just to give it a glance, whenever you are analyzing the market and whenever you are investing into the market, the first index which you have to see is the Nifty Auto Index. If Nifty Auto Index is showing the signs of bullish momentum, that means the markets have formed the bottom and markets are ready to go up. Many people, they say that always see banking index. Many people, they say they see finance index. Many people, they see realty. Many people, they see pharma. Also, many people, they see IT index. But as per the historical trend, we have to first analyze how auto index is doing. If auto index is doing good, if auto index is not falling, that means markets are expected to form the bottom. If auto index or the auto stocks have started to fall, that means markets are nearing their top. So whenever from today, whenever you are analyzing the market, don't go for banking stocks or don't go for IT stocks first. First, see how the auto stocks are doing. If auto stocks are doing good, that means markets are near bottom and markets are expected to go up. Now, what is the logic behind it is, see, whenever there is a boom in the economy or whenever there is a recession in the economy, Banking sector is expected to perform as usual because if there is a recession, if there is a no recession, banking sector is expected to do well because that is a necessity. IT sector will perform because without IT, the life of any corporate or life of any individual is not possible. So, and without homes and without finance, this economy will not work. That means if you want to judge the economy, first judge the auto stocks and auto industry, how it is going, because auto is somewhere, it is a luxury sector. It is a sector which will show you that people are having surplus money to buy autos in their life, surplus money to buy autos, surplus money to buy cars, two-wheelers, which by which they can travel from one person to one place to another place. That means whenever you want to judge whether the economy is doing well or not, you have to see whether the luxury sectors are doing well or not. And the first luxury sector which you have to analyze is Nifty Auto only. So from today, whenever you are analyzing the market, don't go and analyze banking stocks, don't go and analyze any other sector. First, analyze how auto sectors are doing, how auto stocks are doing, and what are the secrets which you have to see. First, see how the sales of the auto stocks are doing. I don't know how many of you know about it, but auto stocks or the auto companies, they give their monthly sales every day, every month. After this weekend, that is after 31st, on 1st of August, you will get the monthly sales of all the auto stocks. Analyze this monthly sales, how these monthly sales are going, which are the companies which are doing good monthly sales. Collect all these monthly sales, keep it in the Excel file, collect the monthly sales of passenger vehicles. In passenger vehicles, there are only two stocks, that is Maruti and Tata Motors, third is M&M. In the commercial vehicles or the trucks, first you will find Ashok Leyland, second is Tata Motors. In the two-wheelers, you will find Bajaj Auto, Hero Moto, TVS Motor, Eicher Motors. In this, you will find these two-wheeler stocks. Prepare an Excel sheet, prepare how these monthly sales are going up. Whenever a company declares the monthly sales, write down in your Excel sheets what are the sales they have done. They analyze these sales in terms of commercial, passenger, and two-wheeler components. How these sales are going and analyze month by month and keep a data of at least 6 months in your Excel sheet. Then only you will see which are the companies which are doing good in the auto stocks and which are the companies which are expected to do good in the coming months. That is why first see auto sector, what are the stocks which are doing well in auto sector, then analyze any other sector. Now, why auto stocks are outperforming in current calendar in 2022? There have been many changes in auto sector. First is drastic change in emerging economies. Many economies are now going electric. They don't want to have a more load on crude. If you see crude oil also from 65 in 2021, right now it is somewhere around 105 or 110. So there is a huge rise in crude oil prices. That is why many people, they have started adopting electric vehicles. So there is a drastic change in emerging economies. Rising new technologies, as I already told you, there is a rise in new technologies. Many auto companies have started manufacturing electric vehicles. They also started manufacturing hybrid vehicles. They have stopped manufacturing diesel vehicles, and they are more focusing on new technologies, new engines, and new type of components, which will help increase their sales. Increase in automations, I already told you, many companies have started investing in automotive sectors. They have started investing more in electric vehicles and hybrid vehicles. That there is an increase in automation. Second is new business models. I don't know how many of you know, but Maruti have already stopped producing diesel cars. Maruti is not producing any diesel cars. It is only in petrol vehicles. From 2024 and 2025, it will come into electric vehicles as well. But if you see Tata Motors, they have started investing in electric vehicles industry from last 2 years. And right now, if you go onto the road, if you see anywhere in the road, out of 10 auto companies are producing. From a traditional auto products, they are now moving to the inventive auto products like electric vehicles and hybrid engines. Now, electrification, I already told you, from 2000 to after 2030, 2032, I doubt more than 30 to 40% of the vehicles will be electric. So you have to find the stocks which are there in the electric vehicle theme. You have to invest in that. Next is the connectivity. I already told you in the last 5 or 10 years, if you want to go from South India to North India, it will take almost 36 or 40 hours. The roads are very good. There is a huge change in the infrastructure in the last 10 years. So there is a huge demand for auto products as well. So there is a huge connectivity. That is why there is a huge disruptive changes in the auto sector. Autonomous driving, I know after 10 years, the driving pattern will also change. So there will be a huge disruptive in the auto sector as well. Now, what are the dynamics of auto sector in 2022? See, Indian automobile industry has traditionally been a good indicator for how well the economy is doing. I already told you, if you want to judge the economy, first you have to judge the auto sector. If auto sector is doing well, that means your economy is doing well. Despite many challenges in showing signs of reaching the pre-pandemic levels of sales volume. See, after this webinar, just type in Google auto sales in India and just see the auto sales in last 6 months. Due to Russia and Ukraine war, all over the global world is suffering from recession. In the US, recession is expected to come in November and December after 2 consecutive negative GDP data. In the Europe, major of the economies are expected to go into the recession. But in India, the recession is not expected to come because still our economy is doing well and there is an increase in sales in the auto components and the auto products. That means there is an increase in sales in passenger vehicles, there is an increase in sales in commercial vehicles, there is an increase in sales in two-wheeler vehicles. See, whenever there is an increase in sales in these kinds of luxury items, that means people are having money in their pockets, people are having surplus money to buy these luxury items. They are having surplus money after spending for their necessary needs. So they are spending more in autos. That means they have their more spending power in the economy. That means whenever auto companies and auto sales are good, that means the economy is doing well, and your economy is expected to do well in next couple of quarters as well. So that is why in the Indian markets are going up. You can see the last 10 to 15 days trend. Each and every indicator in India is doing well. That means if there is a recession also in the world, Indian economy is expected to outperform. If there is a fall also in Indian markets, the fall will be limited, and Indian markets will recover fast than other economies. Again, I will repeat, US economy is expected to go into recession from November and December. European countries are expected to go into recession in the fourth quarter of this calendar year. And many Middle East countries and the Asian countries are also suffering from the post-corona effects. If you see China also, China is still suffering from corona lockdowns. Sri Lanka is also almost, you can see it is under the crunch of the financial crisis. So the only country which is expected to do well in the world is India. So that is why Indian markets are also outperforming the global markets. You can go and check the US markets, European markets and Asian markets. Indian markets are still outperforming very much in comparison to the global markets. That is why this webinar, I'm suggesting you to track the auto sector first before investing into the markets. Track which, if the auto sector is doing well, that means your economy is doing well, and you have to start investing into the Indian markets. Emerging trends such as electrification of vehicles, especially three-wheelers and small passenger vehicles, is expected to drive market. I already told you the trend has changed. Before, the people used to first save and then spend, but right now the trend has changed. People are first spending and if there is something left, then they are saving it. That means people are more moving towards the luxurious life. They are more moving towards the high-profile life in their day-to-day living. That is why auto sector is expected to do well in coming quarters as well. Because the loans are easily available in the market, the banks are giving cheap loans. If you want to buy a car, you will get a loan in a single day or a couple of days. The only condition is you should have a good income tax profiling. So you will get a loan in a one day or single day, so you can get your own automobile within your home. That is why Nifty Auto sector is expected to do well, and still it is outperforming in the market. Now, why there is an outperformance is there is a new era of auto world in India. Auto sector is going into the three new era. That is, first is Automotive Mission Plan 2026. Government has already launched Automotive Mission plan. That means they want to make more vehicles to become automotive, to become more electrified or to become more hybrid till 2026. That is why there has been new launches of electric vehicles, new launches of hybrid vehicles, etc. Second is scrappage policies. I don't know how many of you know, but there is a new scrappage policy which is introduced by the Indian government. If any vehicles which has completed more than 15 years, there is no re-registration of that vehicle. That vehicle has to be again taken into the scrap. That means if any vehicle which is there in the existence from past 15 years, you can't run that vehicle onto the roads. That means if there is any vehicle which is 15 years old, you have to buy a new vehicle for that. That is why the production and the sales of the autos are expected to increase in next couple of years. The first thing is Automotive Mission Plan 2026. It is expected to do well. Second is due to scrappage policy, the auto sales are expected to increase. Third is PLI schemes. PLI is Production Linked Incentive Scheme. In the last 4 quarters, government has come with various incentive schemes for the auto sector. Depending on their production, they are giving incentives to the auto industry or auto companies. If there is a high production in the auto industries, they are giving high incentives to various two-wheeler, three-wheelers, and four-wheelers companies. So this has boosted the auto sales in India, and this has boosted the production sales in the India last 3 quarters. So that is why there is a completely new era in the auto world. I will again repeat it. The auto sector is doing well in 2022. There are only 3 reasons. First is there is a high demand for the autos. There is a high demand for the new era, new change of vehicles in India. There is Automotive Mission Plan of 2026. And due to scrappage policies, many new vehicles have been bought by the people, and there are many new vehicles already bought by the people in India. Third is PLI scheme. Due to PLI Production Incentive Scheme, the companies have started to increase their production, and there is a high production. They are expected that there will be high demand in the market. Still, what we are seeing in the market is there is a huge demand for two-wheeler and four-wheeler vehicles in Tier 2 and Tier 3 cities and the metro cities, but still there is a sluggish demand in the rural areas. But due to good monsoon in the current year, the rural areas are expected to do well in terms of consumption. We are expecting two-wheelers and four-wheelers sales to do well in rural area as well. That is why Nifty Auto stocks are doing well and Nifty Auto companies are doing well. So there are many reasons why these companies are doing well in 2022. Or these are the 3 reasons: Automotive Mission Plan, scrappage policy, and PLI scheme. And next is the monsoon trigger. If monsoon does well, the rural economy will do well, because still 70% of the GDP of India comes from the agriculture sector, and agriculture sector is majorly into the rural areas. If rural areas gets good monsoon, and there will be good income in the rural areas, so there will be more auto sector performance in the coming year. There will be more sales of auto units in the rural areas as well. That is why we are more bullish on auto sector, and auto sector will continue to outperform the other markets or the other sectors in the coming quarters as well. Now, what are the things which are expected to support the auto sector is digitalization of the sector. New online business models have emerged. See, if you want to buy a car, it is a click away from your laptop. Just give a click on the laptop. What are the new cars which are arrived? You will get the comparisons. You will get the specifications. You will get the prices, everything. You will get the showroom locations, everything, just in a single click. So new online businesses, they are helping the auto sectors very much. Second is personalized customer experience that I already told you. Each and everything is available at fingertips. If you want to buy any car or two-wheeler, it is just a click away from you. You have to just see the specification on the internet and just go to the showroom and buy it. And better even post-sales services. You can see many apps and many other companies have launched their apps for the post-sales services. That is also benefiting this auto sector. Better purchase decision. I already told you, if economy does well, if rural economy does well, people will have more savings in their pockets, and these savings they will use to buy the new cars and the new two-wheelers. That is why there will be better purchase decisions. Products directly delivered to customers. I already told you, in a single locality, you will find 2 or 3 franchises who are selling their vehicles. So there is a huge directly delivery available each and every area in the metro. tier 1, tier 2 cities. That is why there is a complete digitalization of the sector, and people are easily getting their vehicles and easily ready to buy their vehicles because loans are easily available and the product specifications are easily available in a single click. If you go to Mahindra and Mahindra showroom currently, that there is a booking of 8 to 9 months. If you want to buy a SUV 700, that is a new car of Mahindra and Mahindra, there is a booking of 7 to 8 months for that car. If you want to buy a Thar car, there is a booking of 6 months. If you want to buy a new Maruti Grand Vitara, there is a booking of 6 months. If you want to buy a new Royal Enfield bike, there is a booking of 3 months. That means there is a huge demand which is available in the market. That is why which is driving these auto companies in the equity market. So this is a channel check what we have done, and there is a huge demand for the auto sector, and that is why the outperformance will continue. Now connectivity has emerged. There is artificial intelligence. There is a virtual reality. If you want to buy a car right now, you will get GPS system. You are getting each and every artificial intelligence in your car. Also, you are getting it into your bike as well. Diagnosis and health reports, everything you are getting in a single click. Early detection of emerging crashes. See, right now, if you are going to buy a car, you are getting each and every facility in your car, each and every artificial intelligence at a single click, preventing breakdowns, highway connectivity, enhancement of countrywide network. See, these all things are benefiting the auto sector. That is why the auto sales are increasing and there's outperformance in this sector. See, electric vehicles, this is one of the best theme which you can play in the market, because in the next 5 years, I think this theme will do well. Many more companies will come into this market in electric vehicles. Right now, the leader is Tata Motors, and Maruti is also coming into this market. MG Motors is already there in the market, and many unorganized players are also there in this two-wheeler segment. Bajaj Auto has already launched their Chetak in the two-wheeler market. Hero Electric has already launched their two-wheeler in the electric market. So TVS is also having an iQube. So many companies are coming with their electric vehicles, and this will be a major disruptive sector for, in the current year. Huge disruption in the EV segment, supportive central and state policies. Even the central government and state policies are coming with their electric vehicle policies. They are giving more incentives. They are giving more tax exemptions to the companies which are there in the electric vehicle segment. That is why people, the new companies or the existing companies are coming to the electric vehicle segment. Encouraging the adoption of hydrogen powered cars, that is also one of the reasons why there is a huge demand in autos. And the first thing, buses and trucks will be the first ones. In India, the first 100% electrification will be done to the buses and trucks, because buses and trucks are the one who are consuming more diesel and more petrol. So the first electrification will be more in buses and truck, and then it will come to four-wheelers and two-wheelers. There will be notable change in the automotive sector. That is absolutely right. Electric vehicles will bring a complete change in the automotive sector. Now, hybrid vehicles, I don't know how many of you know that there's a Grand Vitara, which is a new car launched by Maruti. This Grand Vitara car is having it is a hybrid vehicle. First 70 to 80 kilometers, it will run on electric, and later it will run on petrol. So you just have a review of that car. Many other these kind of cars are also expected to launch. So these kind of hybrid electric vehicles will rule the market in next few quarters. So you have to keep a close watch on it. Promising alternative for the IC engine, that is the traditional petrol or diesel engine. There is a huge increase in fuel efficiency, and Maruti is claiming that it will give more than 26 kilometers per liter of average. The Grand Vitara, that is very good. So that will increase the sales of that company. Lower carbon footprint, that is the pollution will be less. Good resale value. I think these cars will get good resale value, because if you want to buy these cars currently, it is somewhere available at 20 lakhs or 25 lakhs. If you go and sell those cars, it will be somewhere around 15 or 14 lakhs will get the resale value. So resale value will be very good. And high mileage, I already told you, in a single tank will get a mileage of more than 1,000 kilometers in these kind of cars. And these cars will gain popularity due to rising crude oil prices. Crude oil is almost $100 per barrel. So these cars will do well. A bit expensive. It will be a bit expensive currently, but these cars are expected to do well in next 3 to 4 quarters. See, Flexi Engines, this is one of the new initiative which was taken by our Road and Transport Minister, Mr. Nitin Gadkari. He already have directed many companies to launch Flexi Engines. Flexi Engines are nothing but it's an internal combustion engine that run on more than one type of fuel, because Flexi Engines will also run on ethanol. It will also run on petrol and diesel as well. So this is one of the new inventions which is going into the automotive sector. It is a blend of petrol and ethanol or methanol is used, and the engine is capable of automatically adjusting for any ratio. So Flexi engines are the new innovative invention which is done in India, and this will also lead good auto sales in the coming quarters. So Flexi fuel engines are capable of running on 100% petrol or ethanol, and already available in countries like Brazil, USA, and Canada. That means if you go to foreign countries, already they have adopted Flexi engines. Already there are many cars and all are running in Flexi engines. But India, Flexi engines are expected to launch in this year. If that Flexi engines become successful, then Indian auto industries is expected to do and expected to outperform the other markets. And the sales are expected to jump drastically in the next few quarters. That is why you can see there is almost good outperformance in the Nifty Auto Index. There is a huge sales for the Nifty Auto companies, or the auto companies are doing good sales in the past 2 quarters. So this is the one thing which you should keep in mind, that the Flexi engines, that will be the good theme for the next 3 to 4 quarters. I think M&M, Maruti, and these 2 to 3 companies are preparing their infrastructure for Flexi engines. And you can expect a launch of Flexi engines in the next year. So M&M, Maruti, and even Tata Motors are expected to launch the first Flexi engines in the next year. Scope of Flexi engines, car makers have given 6 months time to introduce Flexi engines. Our road and transport ministers have already given a deadline of next 6 months. So companies have to come out with the Flexi engines which can run their vehicles on ethanol, petrol, and diesel both. 80% of the country currently gets E10 petrol. What do you mean by E10 petrol is? If you are fueling your petrol in your tank, 10% of that petrol is ethanol mix. That means Indian oil marketing companies, that is IOC, HPCL, and BPCL, they are already mixing 10% of ethanol in their fuel. That means the petrol what you are pouring into your bikes and cars is mix of ethanol and petrol and diesel. That means the petrol and diesel which you are using currently is already containing 10% of ethanol. That means already India has achieved 10% ethanol mixing in their fuels. So that is one of the disruptive sector which India has taken. TVS has one motorcycle which has fully 100% ethanol based engine. You can go and search in Google. The first company which has launched its 100% ethanol based bike is TVS. So you will get the TVS bike in the market in the next coming months. So first company to launch is TVS Motors. It has already launched one bike with a 100% ethanol based fuel engine. That means there is no use of petrol in that bike. You can run that bike with the use of ethanol. So ethanol theme is also one of the big theme for the automobile industry, which is expected to boost their sales. Now, there has been roaring talks in the market about ethanol fuel and everything. Let's discuss what is ethanol and how it will help the auto industries. See, ethanol or ethanol alcohol is commonly used in an organic chemical compound. However, the properties like a higher octane number than gasoline and less emission makes it a better fuel than petrol and diesel. See, ethanol, it is one of the kind of fuel or one of the kind of liquid which is produced by mostly by the sugar companies. It is one of the byproduct of the sugar cane, which is then mixed with petrol and diesel. So it is a bit cheaper than petrol and diesel. If petrol and diesel are available at 100 and 110, ethanol, it is available at 61 rupees per liter. So ethanol is much cheaper than petrol and diesel. That is why Indian government is more focusing on introducing ethanol into the market and not petrol and diesel. So in next 5 to 6 quarters, you will see many ethanol policies coming from the market. Many ethanol policies will be launched by the government, and you will get many ethanol type of 2-wheelers and 3-wheelers and 4-wheelers which will be available in the market for your usage. So if you want to invest in equity market, search for the theme of electric vehicles, search for the theme of ethanol based themes, search for the themes of the companies which are investing in ethanol funds, Search for the companies which are investing in electric vehicle plants. Search for the companies which are coming with their innovative products in the next 4 to 5 quarters. So those kind of companies are expected to do well, and those type of companies will be expected to increasing their sales. So those kind of companies you should go and invest. See how much ethanol is blended. While there is a various possibilities to mix ethanol, the popular ones are 90 and 85, meaning up to 10 to 15% ethanol is in petrol. Means almost currently India has achieved 10% of mixture of ethanol, and their target is to mix 30% of ethanol into petrol and diesel. That means if you are using a 1 liter of petrol in your vehicle, 30% of that petrol will be of the ethanol. That will be a boost for the auto industry, because this will reduce the petrol prices and this will increase their sales. See, ethanol fuel is prevalent in other parts of the world as well, and countries like US and Brazil are selling up to 30% of blended fuel. I already told you, US and Brazil, they are already mixing 30% of ethanol in petrol and diesel, and India still has actually only 10%, but we want to make it to 30% in next 3 to 4 years, and that will be the major booster for the auto companies in the coming years. Now, what are the advantages of ethanol blending? Vehicles that run on ethanol blended needs very less modification. Existing petrol diesels engines will work. See, if you want to buy an electric vehicle, you have to buy a new electric vehicle, and that will be more costlier than ethanol-based engines. That means if you want to buy an ethanol-based engine vehicle, it will be less costlier than the electric vehicle engine. So there will be two choices for any consumer. It will be ethanol-based product or the electric vehicle-based product. So in the coming next 5 to 6 quarters, if a person want to buy a auto product, if a person want to buy a vehicle, it will have 3 choices. It can be in petrol diesel vehicle, it will be ethanol-based engine vehicle, and third, it can be electric vehicle. So the consumer will get choices. It can choose any one of them. So this will boost their internal sale, and this will boost the overall sector. That is why in this year we are expecting Nifty Auto and Nifty Auto sector to outperform all the other sectors, especially the 4-wheeler sector and the 2-wheeler sector are expected to outperform. Seeing the crude oil prices, which are somewhere around 100 or 105 currently, we are expecting passenger vehicles to do well. We are expecting 2-wheelers vehicles to do well. Among the passenger vehicles, we are expecting Tata Motors and Maruti to do well in 2-wheeler segment. We are expecting Bajaj Auto and TVS Motor to do well. In the commercial segment, I think Tata Motors is expected to do well. So again, I will repeat the 5 stocks which are expected to do well in the next coming quarters due to the government policies and these measures are Maruti, and second is Tata Motors, third is Bajaj Auto, Hero Moto, and fifth is Eicher Motors. These 5 companies are expected to do well in the next couple of years, because they already started investing in the electric vehicle thing, they already started investing in the hybrid vehicle thing, they already started investing in Flexi Engines. So investing in those stocks which are expected to do well and which are expected to increase sales in the next few quarters. So these are the companies which are expected to do well. Now what investors have to do? So investors have to prepare an early investment plan. See, many people, they don't know that if you want to invest in a particular sector, there are Bs available for that. That Bs means it is a mutual fund or it is an ETF which are available to invest in this sector. Nifty Auto is also having a Nifty Auto Bs, that is a Nifty ETF. It is somewhere trading on 126 currently. If you are bullish into the market, like we are bullish into the auto sector from past couple of months, we have advised our clients to invest in Nifty Auto Bs or Nifty Auto mutual funds which are available in the market. If you don't want to invest in any particular Nifty Auto company, you can go and invest in Nifty Auto Bs or Nifty Auto mutual funds as well. So first, early investment plan, you can every fortnight you can invest in every month in auto stocks. Second, invest in regular basis on correction of 5%. Whenever there is a fall in market, whenever there is a fall of more than 5% in auto stocks, go and invest in those auto stocks. Add hybrid mutual funds, add autos mutual funds, and also add Nifty mutual fund that will boost your portfolio. Have some exposure to inflation-based proof investments, gold and bonds. See, no doubt we are more bullish on Nifty, and we are more bullish on the Nifty Auto as well. But if there is a fall in markets, there will be some fall in these stocks as well. That is why whenever you are investing in stocks like in index like auto or index like Nifty, also have some mutual funds of gold and bond as well. That will boost your portfolio whenever there is a fall in market. And try to use the volatility by preserving cash. See, whenever there is a dip in market, nobody wants to buy. They want to buy, they will say that we will buy the market whenever there is a boom. But the best way to buy the market is only during the corrections. So that is why always have a preserved cash in your hands. And whenever there is a correction in auto stocks, go and invest in them, because we are expecting these auto stocks to do well in the next few quarters and next few years. So Nifty Auto will be the first sector which is expected to do well. Again, I will repeat, prepare an early investment plan, write down 5 to 6 stocks. And whenever there is a correction in these stocks of more than 5%, go and invest. If you don't want to invest in those stocks, go to Nifty Auto mutual funds, which are available in the markets. Go to Nifty Auto base, which is somewhere trading on 126, invest in those auto base. And to hedge yourself, also have some gold and bonds mutual funds in your portfolio. So this is how investment should be planned if you are planning an investment in auto sector. Now, what investors should not do, say never panic with the existing investments. I know nobody can catch the bottom and nobody can catch the top of any sector. There is always an opportunity in the market. Whenever there is a dip in the market, whenever there is a correction in the market, if you have bought a good stock, don't panic with them. Your investments will grow over a period of time. So never panic with the existing investments whenever there is a fall in the market. Wait for the opportunity to buy more and average your investments and buy good stocks. Try to restructure the portfolio. See, whenever there is a fall in the market, try to restructure the portfolio. Try to add more stocks in your portfolio whenever there is a dip in the market. Don't exit your existing investment, because whenever you are exiting your existing investment at lows, we will be ending in loss, and the markets will rebound. So whenever there is a fall in market, don't panic with your existing investment. Try to restructure. Try to find the stocks which are corrected and try to invest in those stocks. See, never invest in high risk sector. I already told you, high risk sectors are realty and other sectors. In this time, try to invest in sectors like auto, Nifty, banking, or Nifty IT. Avoid trading in leveraged products. Don't buy the futures or options. If you want to invest really, invest in equity market. Don't go to futures and derivative market if you don't have proper background knowledge of it. Try to invest in equity market only. Never invest in hard-on stock tips. See, many people will be getting tips on their mobile that these companies are expected to do well in electric vehicles. These companies are expected to do well in the next 3 to 4 years. Don't just invest in hard-on tips. Do your proper research first. Wait for the correct price to come, then only go and invest. Don't stop your SIPs in this time. That is absolutely right. Don't stop your SIPs. See, we advise our clients to do more SIPs whenever there is a falling market. If there is a falling market of more than 5% in index, we'll tell our clients to invest more. And whenever there is a rise in market, sudden rise in market, we'll tell our clients to invest slowly. Because if you want to be an investor, if you want to be a successful investor in the market, the first and foremost rule is you have to be an optimistic person. If you are pessimistic, if you think the markets will not bounce, markets are over, markets will not bounce in next couple of months, then investment is not your cup of tea. If you want to be an investor, if you want to invest in equity stocks, the first and foremost rule is you should be optimistic. You should have an optimistic mind. You should be very positive on the market. You should jot down the points in the market, which are the stocks you want to buy whenever the markets come down. Then only you will be able to build a good portfolio. So again, I will repeat. In 2022 and 2023, Nifty Auto is expected to do well. Start investing in Nifty Auto Index. Start investing in Nifty Auto mutual funds. Start investing in Nifty Auto ETFs. If you don't want to invest in mutual funds, go for frontline Nifty index stocks, Nifty Auto stocks like Maruti, Tata Motors, which are doing good in four-wheelers, Bajaj Auto and TVS, which are doing good in two-wheelers, and Tata Motors and Eicher Motors, which are doing good in passenger, which are doing good in commercial. Start building your portfolio. We expect Nifty Auto to do well in this in the next few quarters. And if there is some correction in the market, if there is more than 5 to 10% correction in the market, that is the best level to again re-enter into the market and do your averaging of your investments. So that is the overall crux of this webinar, because just we have seen that Nifty Auto is outperforming, and we have collected the data of past 20 years. Whenever there is a outperformance of Nifty Auto in comparison with Nifty, that is perfect time for you to invest, and that is a perfect time when the markets will form the bottom. So that is the crux of this webinar. We expect Nifty Auto to do well in the next few years, investing in Nifty Auto. So this is about the theme, and just wanted to discuss few more points. Other than Nifty Auto, if somebody want to invest, the next sector which we are bullish is Nifty Bank and Nifty IT, because Nifty Auto will be the first to move, and the next sector which is expected to move is Nifty Bank and Nifty IT. So the three sectors which we are advising our clients to do is, first is Nifty Auto, Nifty Bank, and Nifty IT. So whenever there is a correction, invest in these three sectors and build a good portfolio. So this is all about today's webinar on Nifty Auto. Just to give you a pinpoint presentation on how Nifty Auto has outperformed, this webinar was conducted. We can take some questions if there are any questions listed.
Dear attendees, if you have any questions, please type in the chat box. We will try to resolve your queries. I believe there are no more questions. Thank you so much, Mr. Arun, to share your insights on the today's topic, and big thank you to everybody for attending this session. Please watch out for more sessions coming your way, and we would be sending your feedback from for today's topic. So you please fill out the please let us know how did you like the session, and you can also reach out us our social media platforms such as Facebook, Instagram, LinkedIn, and YouTube. And for further queries and doubts, you could reach out us on our customer support system on our website, that is bigul.co. Thank you all of you. Thank you for attending.